Dow is red, so is the S&P. NASDAQ a little bit positive. There's 442 on the 10-year. Joe, discretionary and tech are the only positive sectors of the day, but we are on track, as we said, for the best month in a couple of years. Just look at the VIX, too, under 13. Yeah, 12-7.
Remarkably, this pattern that's been in place for the entirety of November, where if you have any type of dip, the market seems to stabilize and then resume the prevailing bullish trend. And I think we saw a little bit of that this morning. You had some early weakness in the NASDAQ, Apple, Nvidia with both down. That's been washed away. Apple and Nvidia now have turned, and then they're now in the green. So I think what's important is to understand that overall trend for the month, and I think that gives a strong degree of confidence that the high for the S&P back in July at 4607, that intraday high, that seems to be the target of where we're headed in the coming weeks.
All right, Steph, so are we going to get there and then beyond?
Yeah.
It's been one heck of a month, and things seem to be going according to plan, right? Yep. Black Friday's strong, so the consumer's still spending. We're still, some would suggest on pace for that soft landing, which, many thought was elusive some 12 months ago, but here we are.
Yeah, a lot of things are going right now, right? Inflation is lower. Interest rates are lower. The economic data is running at about 1.5%, 2% in GDP. Not a disaster. Not as strong as 3Q, but certainly holding its own. And then the big change in the last couple of weeks is oil. I mean, oil's down 20% from their highs. And that means that the consumer has something like $54 billion in pent-up potential spend. And that actually, I think, is going to, not all of it's going to get spent, but I do think that's a nice tailwind. So I still think the consumer's hanging in there. I think they will, and that's a big part of the economy. So I'm pretty bullish.
Yeah, how much room do we have, Jason, for this run we've been on?
I think we still have quite a bit left, honestly. I think the one thing I will say is I think we're slightly overbought in the very, very near term. But I don't think that has any bar on a run into December, right? Because I think one of the things that we haven't mentioned yet is Chase is still there. There's a lot of money managers that have not done well throughout this year. We've talked about the Magnificent Seven all year. Equal weight, S&P. There's a lot of folks that just haven't returned. And I think that Chase will come into play towards the end of the year. And I think that's why I'm stay positive.
It's interesting, Brian, whether, if there's a fair amount of cash on the sidelines, been sitting in money markets for, as long as we can remember at this point, whether that's bullish now for both stocks and bonds, right? Because if money's going to come out, where's it going to go? It doesn't necessarily go just into equities, because there are those who suggest that bonds are just as attractive right now as stocks are, if not even more so.
That's right. I think private wealth has done an amazing job running their portfolios this year. And, a lot of the higher net worth private wealth people have products where you can have a 5.5% money market account. And, we've been saying for a while that we're entering a period where you can, will, and should own both stocks and bonds, especially considering that we're coming out of this 2-year period, Scott, as you know, of negative real rates of return in bonds for the first time in over 40 years.
You seem a little subdued over there. You all right? Tough traveling over Thanksgiving weekend.
Listen,
got you down. I mean, because you shouldn't be subdued with a 5,100 base case for next year for the S&P. I'm wondering what your bull case is.
5,500.
Okay. How are we going to get better than 10% minimum?
Well, how we're going to get there is that we see a really rapid drop-off in inflation. We see earnings just take off, and GDP holds in there a little bit better than we thought. And so I think from a 5,100 number, that's for our 5,500 number. For our 5,100 number, which is our base case, inflation rolls over, recession in name only, not a technical recession. Rates stick around 4% for the first half of the year, dip below 4% the second half of the year. The market broadens out. We're going to be in a market where you should own both growth and value. And in terms of size and style, I like to call it the Jackie Moon market. Own everything, ELE, right? Everybody love everybody, meaning small, medium, and large together.
Own everything. So everything's, we're in
equal weight everything. Equal weight everything. Don't be massively over large. Don't be massively over small. Own a combination. So what that tells you is get smaller overall, right? Because if you take a look at equities in general, equity positions are way underweight small caps. So you need to build those positions in small caps.